Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It is July 12th. Today we're going to take a look at a company out of the information technology sector, Dell. Let's jump right in the video. If you want to know more about this company, check them out, www.dell.com. That's www.dell.com. That is their homepage where I pulled this information from. We create technologies that drive human progress. Our story began with a belief and a passion that everybody should have easy access to the best technology anywhere in the world. That was in 1984 in Michael Dell's University of Texas dorm room. Today, Dell Technologies is instrumental in changing the digital landscape the world over. We are among the world's leading technology companies, helping to transform people's lives with extraordinary capabilities, from hybrid cloud solutions to high-performance computing to ambitious social impact and sustainability initiatives. What we do impacts everyone, everywhere. So they're in laptops, desktops, workstations, monitors, servers and storage, electronics, right? They have their hand around computers, computer technology, information technology. That is kind of their bread and butter there. Again, www.dell.com. That is their homepage. Go ahead and check them out if you're interested in more about the company. Now, the reason we are taking a look at them today, they were down 2.82%. We are talking about Dell Technologies, ticker DELL, out of the information technology sector. Closed the day at $54.17. Looks like they're up a little bit in the after hours, $54.33. 52-week range as low as $32.90, as high as $55.86. So even though they had a 2.82% drop here, they really are right up against their 52-week high here. Average volume 4.8 million. Today's was 5.8, and you can see that sell off throughout the day, pretty much from start to finish, just a sell down. Market cap of $40.019 billion, a beta of 1.02, so they are slightly more volatile than the overall market. Price to earnings PE ratio, $20.68 per share, a little elevated for my taste for a company that has been around since 1984. So they are a pretty well established digital technology company here. Earnings per share, EPS, $2.62 per share. Next earnings date is coming up August 31st. So look for that if you're interested. And their forward dividend, $1.48. They are a quarterly payer, so divide by 4. We'll see that here in a little bit. Dividend yield to 2.66%. So decent dividend yield here. Ex-dividend date coming up July 24th. And the one-year target estimate, at least according to Yahoo Finance, $53.38. So it actually does not speak to upside appreciation. It actually speaks to some downside appreciation here if you look at their one-year target, because they sit a little bit above this $53.38 target price. Now I want to get in here and look at the dividend yield theory. Under statistics, you find it under dividend and splits, and we would typically go to our 5-year dividend yield average, but they don't have one. They don't have 5 years of dividend payout, so we'll just have to stick with their 2.66% dividend yield, which again is pretty decent, but we don't know necessarily that they're growing. We'll see here in a minute. They do have a pretty low payout ratio, 51.13% payout ratio here. Now, I want to get into financials, and you'll find a lot of information under financials, their balance sheet, their income statement, revenue, whether they're buying back shares, their debt, all that information. One of the things we want to look at under that tab is free cash flow. We want growing free cash flow over time so that the dividends can grow over time. 2020, $6.7 billion. 2021, $9.3 billion. 2020, so that was nice, but here's where it starts to get a little concerning. From 2021 to 2022, a big drop off, over $2 billion, down to $7.5 billion. And it does not look good so far in 2023. What they've reported so far is only $562 million, right? So they have a long way to go over the next 3 quarters if they were to beat what they did last year. So it may be another third year in a row of declining revenue, free cash flow here. So that is not good to see. You want increasing free cash flow. So overall, from 2020 to 2022, slight growth, but looks like it might be down in 2023. This would be worth watching if you were interested in the company. I might give it another quarter or two to see if they're looking like they're going to miss their free cash flow from last year. Let's keep on going here. Now, I always recommend more than one source. So another one that I like is stockanalysis.com. I'm not affiliated with Stock Analysis or Yahoo Finance that we looked at on the previous page, but you want to check to make sure the information you are getting is accurate. So that's one way I check to back check and see that, again, sometimes these companies don't update information at the same time, or they might be lagging, or they might just have the wrong information altogether. So make sure you're pulling at least more than one source to back check information. Now, they have 17 stock analysts that have taken a look at this. They call it consensus buy. Actually, I completely disagree with this. And even their own estimates here don't seem to jive with what they're showing as far as their estimates for a buy, because their low estimate is $39, which would be a 28% decline from where it currently sits. Even their average estimate is $51.88. That would be a 4.23% decrease from where it sits. Even their median, which I don't even typically cover, is only $53, which would be a 2.16% decrease from where it sits. And only if you went to their highest estimate of $60, which would be a 10.76% increase in the stock price, would this be a buy. So whenever the median and average and the low are all lower than the current price, I do not see it as a buy. I just completely disagree with that. Now, this stock analysis gives a lot of the same information that you'll find on other pages. Right under financials, you'll find their income statement, their balance sheet, debt, their revenue, all that. Statistics is what I like to look for: return on equity, ROE, and return on invested capital, which we find over here. I like 10% or better. And when we look at their return on equity, they are negative 62.60%. That is not good. Return on invested capital is over the 10% threshold. We'd like 17.2%, but this is really bad, right? That is not a good sign there. Return on equity in the negative, and in the negative by a long shot. Well, let's keep on going here and see what their dividends have to say about them. So as we saw, they do not have 5 years of dividend payouts. They really only go back to 2022, at least what I could find. If anyone has any more information, if they paid out longer, drop a comment down below and let me know. But what I could find is back to 2022, they started out in April of last year paying 33 cents. Now, it does look like they've had some slight growth here from 2022 to 2023. They went from 33 cents in January to 37 cents in April, and they are on the April, July, October, January, April, July, October timeframe. So I would expect them to pay again in July and then again in October of this year to keep up with that quarterly payout. Again, in the 50s, 56.27%. I think it was 51 was shown on the previous Yahoo Finance page. So it's in the 50s for payout ratio, and does look like slight growth. Now, will they continue this? That's the question, right? They're saying not applicable for dividend growth. Usually, like I said, I like to see 5 years or better at least. This one just doesn't have that. So a few things going against this one, in my opinion. I think the current price of the stock per share is elevated. I would be much more comfortable with this pulled back to their 52-week low before I got into this one, back down into the high 30s. Nowhere in the 50s would I be comfortable with this stock. I would also want to see a few more years of free cash flow growth, or I'm sorry, dividend growth, and the free cash flow is the other one I would watch. It does not look good. It looks like it's declined over the last year and a half to 2 years maybe, and possibly will be declining this year as well. So some concerns on this one here. Let me know what you think down in the comment section. Again, I am not interested in this company at its current price. It would have to pull back significantly, and even then, I think I would probably go with like a Cisco or HPQ or something along those lines in this space if I wanted to get in the technology space, which are two companies that I do own. So full disclosure there. I may be a little bit biased, but by the numbers, especially the return on equity being negative, free cash flow looking like it's declining, not a long history of growing dividends. Overall, this is not a company I'm interested in. Just my opinion. Let me know what you think down below. This is the Vested Interest Stock Screener. If you want to check this out, go ahead and pause this and check it out at your leisure. This is how I run through the videos, so it gives you an idea of why I set the videos up the way I do, as well as how I look at a company to see if I am interested in investing in or adding it, if it's a current company, or continuing to add it to my position. Well, that is it. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, hit that subscribe button down below. Join us on this journey to financial freedom. Join the Vested Interest community, building a community of like-minded dividend growth investors so we can share our experiences, so we can learn from each other. Stocks we're watching, stocks we're avoiding. Like this one, I am avoiding this one. It's just not one that, based on the metrics, I'm interested in. But let me know what you think down below. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a stock or a company like Dell you want me to cover in the Stock Pick of the Day series, go ahead and drop it down below in the comment section, and I will work it in. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and ability, and should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek advice counsel for a certified financial advisor.